This is the capstone. We're going to take one trade and run the entire series on it. In order, read the bias, mark the zone, wait for price, enter, place the stop, set the target, and manage it out. Nothing new here. It's about seeing how the pieces click together into a single, repeatable process. Let's trade it. Step 1. Bias. On the higher time frame, price is making higher highs and higher lows, an uptrend. That decides everything downstream. We are only looking to buy, only from demand. We mark the major higher time frame demand zone below price, and, for now, we do nothing else. We wait for price to come to us. Direction first, always. Step 2. The zone. As price pulls back into our higher time frame demand area, we zoom in and mark the actual base, a tight consolidation that produced a fast move up. We check our A+ boxes. It's fresh, the departure was strong, and it sits right at the higher time frame level. We draw it from the candle bodies, proximal and distal, keeping it tight. This is the zone we'll trade, not a random level, a qualified one. Step 3. Entry and stop. Price arrives at our zone. We drop to the lower time frame and wait for a reaction, a small shift up that shows buyers stepping in. We enter at the proximal edge and place the stop just beyond the distal line. Because the base is tight, that stop is small, which is exactly what makes the next step worthwhile. Prop challenge, or leveling up your own trading. Signal Deck tracks every trade in R with quant-level analytics. Prove your edge. Free. Link in the description. Step 4. Target and manage. Our target is the opposite zone, the supply sitting above. As price lifts off and structure shifts in our favor, we move the stop to break even, so the trade is now risk-free. We let it run toward that supply zone, maybe taking a partial along the way. Small stop, distant target. This one setup pays several times what we risked. That's the whole method, executed once, cleanly. And that's the series. The process never changes. Read bias from the higher time frame. Mark a fresh A+ zone. Wait for price. Enter at the proximal with a stop beyond the distal. Target the opposite zone and manage to break even. Repeat that with discipline and you're trading supply and demand like a professional. The full playlist is linked below, along with our sister series on liquidity and smart money concepts if you want to go deeper. Thanks for watching, and I'll see you in the next one.